Welcome back to the AlgoBot channel, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm AlgoBot, your guide, and today we're studying an expert advisor called Swing Pivot Pin Reversal. This is a pure price action approach that blends two classic ideas, support and resistance drawn from fractal swing pivots, and the pin bar rejection candle. Over the next few minutes, you'll learn how the strategy maps key levels, how it reads a rejection wick at those levels, and how it places its stop loss and take profit using the average true range. Let's dig in, for educational purposes only. Let's start with the big picture. Swing Pivot Pin Reversal is a reversal strategy that trades against short bursts of momentum, looking for moments where price pushes into an important level and is then rejected. It is built entirely from price action, so there are no lagging signal lines layered on the chart. Instead, the strategy relies on two building blocks working together. The first block is structure. The expert advisor scans recent candles for fractal swing pivots. A swing high is a candle whose high stands strictly above the highs of the bars on either side of it, and a swing low is the mirror image. The most recent confirmed swing high becomes the active resistance, and the most recent confirmed swing low becomes the active support. These are the decision levels the strategy watches. The second block is the pin bar, sometimes called a rejection candle. This is a candle with a small body and one dominant wick, showing that price tried to move in one direction and was firmly pushed back. The strategy combines these by waiting for a pin bar that sweeps through a level and then closes back inside it. To size its risk, it uses the average true range indicator, which measures recent volatility and anchors the stop loss and take profit to that reading. Because it works from raw candles and structure, Swing Pivot Pin Reversal can be applied to many symbols and time frames, from major currency pairs like the euro versus US dollar to metals and indices. It tends to suit patient, price action-minded traders who prefer a smaller number of structured setups over constant activity. Remember, this is an educational breakdown of how the code behaves, not a recommendation or a promise of any particular outcome. Trading always involves risk, and losses are part of the process. Now let's walk through exactly how the strategy makes a decision, step by step. Everything happens on completed candles. The expert advisor uses new bar detection, so it evaluates its rules only once, when a fresh candle opens and the previous one has fully closed. This avoids reacting to noise inside an unfinished bar. On each new bar, the strategy first updates its levels. Using the PivotLookback parameter, set to 3 by default, it checks whether the candle a few bars back qualifies as a fractal swing high or swing low, meaning its high or low is the most extreme compared with the 3 bars on each side. When a new swing high is confirmed, it becomes the active resistance. When a new swing low is confirmed, it becomes the active support. Next, the strategy inspects the most recently closed candle, which it treats as the signal bar. It measures 4 things: the candle's total range, its body size, its lower wick, and its upper wick. From these it works out whether the body is small relative to the range, and where the close sits within the range. For a long setup, 3 conditions must all line up. The body must be small, which the BodyMaxRatio parameter caps at 40% of the range. The lower wick must be dominant, at least 55% of the range, set by the WickRatio. And the close must finish in the upper portion of the candle. On top of that pin bar shape, the candle must sweep the support level, meaning its low dips to or below support while its close finishes back above it. That combination describes price probing beneath support, finding no follow-through, and snapping back. When all of this is true, the strategy places a buy order. The short setup is the exact mirror. A small body, a dominant upper wick, a close in the lower portion, and a sweep above resistance that closes back below it, which signals a sell. Risk is defined by structure and volatility. For a long, the stop loss sits below the candle's low, with an extra buffer of half an average true range by default. The take profit is placed a multiple of the average true range away, 2 times by default, giving a reward-to-risk framework. The strategy also holds only one position per symbol at a time, so it waits for the current trade to resolve before considering another. Let's look at the actual MetaQuotes language code, as you'd see it inside MetaEditor. At the top are the inputs that shape every decision. PivotLookback controls how many bars sit on each side of a fractal pivot. WickRatio sets the minimum dominant wick size, while BodyMaxRatio caps how large the body can be, together defining the pin bar shape. ATR period feeds the volatility reading, and the stop-loss buffer and take-profit multiple are both expressed in average true range units. Lots fixes the trade volume. Now the long block. The Boolean named bullpen is true when the body is small, the lower wick is at least the wick ratio of the range, and the close position is at least 55% up the candle. The companion Boolean, support sweep, is true when the candle's low reaches or breaks support, yet the close finishes back above it. When both are true, the code reads the ask price as the entry, sets the stop below the candle's low minus the buffer times ATR, and places the take profit at the entry plus the take profit multiple times ATR. If the stop sits safely below entry, it calls trade.buy. The short block mirrors it. The bearpin Boolean asks for a small body, a dominant upper wick, and a close in the lower portion. The res sweep Boolean checks that the high pierced resistance while the close fell back below it. With both confirmed, the code takes the bid as entry, places the stop above the candle's high plus the buffer, sets the take profit below entry, and calls trade.sell. Each order carries the same structure-based stop and target. Let's bring this to life on the chart in front of you. You're looking at a candlestick sequence with two horizontal reference lines drawn from the strategy's swing pivots, a support line at 1.0830 and a resistance line higher up at 1.0900. Watch how price interacts with these two levels to produce first a long trade and then a short trade. We begin on the left, with price drifting lower over the first few candles. Each bar closes a little beneath the last, and the market is sliding down toward that green support line at 1.0830. This is the resting structure the strategy has already mapped, the most recent confirmed swing low, and it's exactly the kind of level where the expert advisor starts paying attention. Now watch the candle that reaches support. Price dips its low slightly beneath the 1.0830 line, poking into the area just below it, but by the time the candle closes it has been pushed firmly back up above the level. Notice the shape, a long lower wick, a small body sitting near the top, and a close in the upper portion of the range. That is a textbook bullish pin bar, and because its low swept beneath support while its close reclaimed it, both of the strategy's long conditions are satisfied. You can see the buy entry marker appear right here. The stop loss is tucked just below that rejection wick, with the average true range buffer added beneath it, so the risk is defined by the very low that the market just rejected. From there, follow the move. The next candles begin to climb, one after another, as the rejection plays out and buyers push price away from support. The bars build steadily higher, and the strategy is simply holding its position, letting the average true range base target do the work. Price advances all the way up to the take profit marker near the top of the run, where the take profit, set at 2 times the average true range above entry, is reached. That completes the long trade, a sweep of support, a rejection, and a measured move into the target. Now the chart shifts character. After tagging that high, price stalls and pulls back, but in doing so it leaves behind a fresh swing high right around the resistance line at 1.0900. This becomes the new active resistance, and the strategy now watches it from the other side. Price eases lower for a couple of candles, then turns and rallies back up to challenge that level. Watch the candle that meets resistance. Its high pierces above the 1.0900 line, briefly trading above it, but the candle is unable to hold those gains and closes back below the level. The shape is the mirror of before, a long upper wick, a small body near the bottom, and a close in the lower portion of the range. That is a bearish pin bar, and combined with the sweep above resistance and the close back beneath it, the strategy's short conditions are all met. The sell entry marker prints here, with the stop loss placed just above the rejection wick plus the average true range buffer. From that point, price rolls over. The following candles step down, body after body, as the rejection of higher prices carries through. The strategy holds the short while the move develops, and price travels down to the take profit marker, where the target, again 2 times the average true range from entry, is reached. That closes the short trade. So in one clean sequence you've seen the full personality of swing pivot pin reversal, Map support and resistance from swing pivots. Wait for a pin bar to sweep a level and close back inside it. Enter on the rejection, anchor the stop beyond the wick, and aim for a volatility-based target. The same logic simply flips between the long and short side. Of course, not every setup behaves this cleanly, and in live conditions losses do occur, which is why structured risk is built into every order. That brings us to the end of our breakdown of swing pivot pin reversal. We covered how the strategy maps support and resistance from fractal swing pivots, how it reads a pin bar rejection that sweeps a level and closes back inside it, how it builds its long and short entries, and how it anchors stops and targets to the average true range. Everything here is educational information only, intended to help you understand how the code behaves. It is not financial advice, not a recommendation, and not a solicitation to trade. If you found this useful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment telling us which strategy you'd like us to analyze next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.